Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning, hello and welcome to Bazaar Morning Call. We're coming to you live as always from the CNBC TV 18 Motilal Oswal studios. It's been a pretty decent week for the market. It is Friday, which is a big Q. I'm Surabhi Upadhyay. With me is Reema Tendulkar today. And the birthday boy in the house, Nigel D'Souza. Wish you a very happy birthday, Nigel. You're a fabulous colleague, fabulous friend, and we wish you all good things along the way over the next 1 year.
Thanks a lot for that, Surabhi. It's great to be here and receive all the love. And I've been here for 14-15 years. And every single birthday, I prefer to work because the warmth, the love you get. And, I thank CNBC TV 18 for that. It's been a good year. And hopefully the next one is even better than the past one. But thanks a lot for all your wishes.
Your warmth, your positivity, and your
energy
and the ever helpful nature. The day you're not there in office, things are very quiet. So I hope this day is as vibrant and full of life as you are.
Guys, I've started the planning. The snacks are coming, then the party,
Breakfast,
then the after
lunch.
party. I'm keeping the plan.
I'm on air till around 11 a.m. At around 11:30, you'll have fresh snacks on the floor for everyone. My PCR, makeup team, everyone, everyone who makes me look good and tolerates me every day. And as I say, the good vibes come from the fact that we never sleep without, making up for anything that was amiss during the course of the day. But thanks a lot for your wishes. We've got a market to get to, so let's get straight to the action.
Okay, and the market's actually been in decent form, you'd have to say. It's not been a bad week, like I said. It's not a week where you've had big pops on the index. It's not a week of huge moves, but all things put together, the Indian market has been climbing walls of worry. It has been climbing higher. So let's start with what the latest is. Now we are back to reading the signs and reading between the lines when it comes to the India-US relationship and dialogue. And let's start first with the comment that came in from Commerce Secretary Howard Lutnick. Now, he has said that India must make meaningful concessions, starting with reducing its reliance on Russian crude. So despite the social media exchanges between Prime Minister Modi and the US President, there are still a lot of noises around Russian oil. Take a look at this.
We're going to sort out India. India basically has to open their market, has to stop buying Russian oil. People don't remember, India didn't buy Russian oil before the war with Russia and Ukraine. They had 1% of their oil was from Russia. And now 40% of their oil is from Russia because we've sanctioned it so they can buy it, $7, $10 a barrel cheap. So they're buying it, refining it, and then selling it to the rest of the world and making a bundle. So the president called nonsense on that and said, you got to stop that stuff. So I think India will sort it out once they stop buying Russian oil.
So this whole Russian oil business is still a big talking point. But let's see, as long as you can talk, about it and maybe come to some sort of understanding, it would be extremely helpful. That's at least the base case the market is going with. We've also got some comments from the person who's going to be taking charge in New Delhi as the US ambassador to India, Sergio Gore. And he has again, spoken about Russian oil, saying that the president has made it clear that India must stop buying Russian oil. And he also goes on to say, it tells you that Washington is watching the overtures between India, China and Russia very carefully. He goes on to say that we will make it a top priority to see to it that India is pulled into our side and away from China. There might be some slight moments of hiccups right now, but we're on track of resolving this in the ongoing trade talks. So largely positive. They're reiterating their stance on Russian oil, but talking about taking the relationship forward and putting it back on track. So that's as far as India-US is concerned. Now let's come to the rest of the market cues. And we've had actually a pretty strong close across Wall Street once again. And it's been a market, moving on steroids. The market itself is up about 1.5% so far this week. And yesterday was more of the same. Now, yesterday, twin factors played out, which made the market quite excited. You had labor market data, which was weaker than expected, and you had inflation data, which was more or less in line. So let's look at the numbers. That's the CPI number. 0.4% rise month on month, more or less in line. Some estimates were saying 0.3. The year-on-year picture of 2.9% is also in line, though it's inched higher versus the July print. So that's inflation, not a shocker. And look at the labor market data. The jobless claims data is something to take note of. Jobless claims in the US are at the highest level since 2021, and that number was above estimates. And that led the market to pick up the hope that, yes, indeed, there'll be a rate cut next week. 25 basis points is the base case if you're looking at the market indicators as of now. Because of this, there was a bit of a move in the money markets as well. Yields have been moving higher. Bond prices are rallying in anticipation of that rate cut. The US 10-year closer to the 4% mark. There was a slight drift down in the dollar as well, so we'll watch for this. All eyes, of course, on the US Federal Reserve. Coming to our market here, like I said, it's been a decent week. The Nifty has climbed about 1%. The mid-cap index has done even better. Look at that, 1.7% on the mid-cap index in the last 4 trading sessions. And if we talk about the levels now, Nifty is at 25,000. It probably is going to meet some resistance around the 25,150 mark, and the lower zone of about 24,800 to 900, where the moving averages come in. They are sound support. Right now, Nifty obviously is above everything: 20, 50, 100, 200-day moving average. The question is, can the bulls continue to build from here? Nigel, how's it looking when you look at the F&O action?
Well, it's looking good actually for the Nifty. And the good news is the Nifty is actually performing in step with what we are seeing in the global markets. Remember, in the past year or so, we've actually been underperforming. But it's good to see that we're performing in step for this week itself. And also, we're on a 7-session winning streak. And the close that we saw yesterday was a multi-month high. So that's very, very good news. Now, the few indicators that you're getting, going by this week's cues itself, GST rationalization, very, very good. It will lead the economic recovery, which is good. But the market's, positive sentiment comes from the fact that if there is some kind of movement on the India-US trade point, you will say that, in fact, things are not so important with regard to the United States. We can offset some of that. But this is a sentiment indicator. And, this goes to show this week itself, all the positive cues that you have been getting, the sound bites as well, that the markets are actually fixated on this. India-US trade deal is something that the bulls want. The institutions, well, they are net buyers. Remember, the last few trading sessions, we have had large block trades as well. But for the last many trading sessions, the institutional number is a net buy. So you like that. What about the FIs? We've been making this point, right, that the FIs are not getting follow through on the short side, and sooner or later, they'll have to do that. That's what's gradually beginning to happen, because the short positionings came down by around 2,100 contracts odd. The short positioning from around 92%, which is the highest we have seen ever in percentage terms, has come down to around 89%. And the next graphic plate will tell you the story. Because the short positioning has come down by around 10,000 contracts, the FI net short positions from around 1.92 lakh contracts on the short side, that's come down to around 1.82 lakh contracts on the short side. And that as well should come up for you. Just take a look at that. So there is some short covering that's taken place. And that perfectly ties in with the Nifty Bank, because the Nifty Bank was the one where the shorts were piling in. And in yesterday's trade, the total open interest on the Nifty Bank was down by close to around 4% approximately. So that's clearly telling you that there is a bit of a short covering bounce. This is the October contract. But the near-term contract, we're definitely seeing some bit of a short covering bounce that's taking place on the Nifty Bank. Moving to the options data, then the 24,950 call, the premiums around 150 rupees out there. And there are signs of writing out there. While on the downside, the 25,000 put. So just for today, if you're looking at it, on the downside, going by there is writing out here, the 24,900 mark becomes important. And on the upside, since that's writing at around the 24,950 call, the 25,100 becomes a bit of a resistance mark. So those are the crucial levels for today's trading session. Let's focus on the two large components of the index. One is the Nifty Bank. Yesterday was a good close. We ended pat in line at around the 20 DMA. You wanted to get past that and gradually move higher as well. So a close today on the Nifty Bank, it seems to be finding its form. That's going to be important. And Tech, Rima will tell you about that. Infosys' buyback could support Infosys as a stock, and also because of its weightage on the index. We'll have to keep an eye out on that. And in the last month or so, Tech has suddenly come back. Year to date, it's an underperformer, but that one, in fact, has outperformed in the last week or so. So that's good news as well.
Well, it also helps that Nasdaq is ripping Wall Street.
Yeah.
The Nasdaq index closed up about 0.7%, and it was the 24th record close on Nasdaq for this year itself. In fact, U.S. equities did well. The Dow topped that 46,000 mark for the first time, and Asia's carrying forward the lead from Wall Street overnight. So you've got a Seng, you've got this Korean market, Kospi up more than 1%. The Taiwanese market's also up close to about 1%. So things are looking good across Asia. But